Hey, Tim Kerley here with your Friday FAQ, and this week's question is about underwriting overlays, something that just came up this past week for some clients I'm working with. So I wanted to put this video out here just so you can kind of understand how the underwriting process works and how this might be affecting your clients. So first of all, let me just tell you what an underwriting overlay is, and we'll kind of talk about how it would affect your clients or might affect your clients. So an overlay is simply an additional loan guideline or policy that an individual lender might add to a loan program. This could be, it's not specific to any loan programs. It could be for conventional, FHA, VA, or USDA. So let me give you an example. On FHA loans, if you go look up the actual guidelines from HUD, pretty sure FHA will allow the borrower to go down to a 500 credit score. Now, I don't know any lender that will actually do an FHA loan at a 500 credit score. There probably are some. I'm not aware of any. Pretty much all lenders stop at 580. They basically say, hey, we know HUD or FHA will take the loan all the way down to a 500 credit score, but we are going to put our minimum credit score at 580 on an FHA loan. Well, why do they do this? Because as you know how the process works as a lender, the loan is actually being sold, but the lender actually has some liability on that loan for the first few months. So if the loan doesn't perform, then the lender could be on the hook for that. So the lender is going to, every lender is going to look at their own loan history or whatever attributes they've seen, and they might, see a pattern establishing here where they say, hey, people with below this credit score that have this attributes, in many cases, these loans don't perform at a higher level than the normal loan population. So therefore, we're going to add this underwriting overlay, which is an extra rule for our loans that basically say, hey, if it doesn't meet these criteria, we are not going to do that. So again, that can take the form, in many cases, it takes the form of higher credit score requirements. A USDA credit score minimum is 620, but an individual lender could say, hey, we're going to set our minimum for USDA to 640 instead of a 620. So that means if you're below 640, we would not be able to handle that. Another situation, and this is one that, again, I've had come up, is with gift funds. A particular lender could say, if your credit score is below such and such, then we're going to require you to have some of your own money into this transaction. You can't use all gift funds, unless you're doing a larger down payment or whatever the case may be. That's an individual lender overlay. It's not a rule that Fannie Mae and Freddie Mac set. So it's important to know that. It's important to know the difference. What is this policy actually an overlay, or is it an actual guideline that's coming from the individual investor themselves? So just be aware of that. Sometimes things are overlays, and different lenders, again, put emphasis on different things. But I hope that makes sense to you. If you have any specific questions, please feel free to reach out. I'll be glad to answer any questions that you have. Have a great weekend, and we'll see you soon. Bye.